Welcome to Classic Value Investors and Microcap Explosions. This is Mariusz Konieczny. Today I have a special guest with me, Matthew McCleery, the author of The Shipping Man. Some of you know that I recommended and I talked about this book. So Matthew, thank you very much for joining me.
Oh, thanks for having me.
Yeah, so a fantastic book for people that are new or want to educate themselves on the shipping sector. I enjoyed the book very much, but I wanted to, talk with you and talk about the book, talk about your background, talk about how you are still involved or in what way you are involved in the shipping business. So kind of go ahead and give us a background of who you are.
Yeah, thanks. Well, I want to thank you for your support of the book and your kind review and sharing it with your network. I wrote the book I started it in 2009. I originally got into the shipping business in 1996 after graduating from law school. And it was funny. I had no sort of connection to shipping, except that I grew up near the water and I had always seen cargo ships coming into Long Island Sound. And I had always been, even as a kid, I remember being very fascinated by these massive objects that were yet sort of like invisible to people. You'd see pleasure craft cruising around and then there'd be this, 500-foot cargo ship coming in to load scrap steel. And it was almost like people didn't see it. It was kind of amazing. But I wasn't, so when I graduated from law school, I wasn't super interested in becoming like a sort of traditional lawyer. And I, in a kind of act of serendipity, got off the highway one day because I saw a ship that was along the quayside loading scrap steel. And I remember vividly, I got off and I was just wanted to like investigate the ship. And this was before 9/11. You could actually go into a seaport. It wasn't a secure area. And I met the ship's agents, New England Navigation, Dave and Joe, and they were great. And I told them I'd always wanted to go on a ship, and they gave me a hard hat and they took me on board the ship. And so that's how I got into the shipping business.
Okay, and as far as your book, what gave you the idea to write the book? And maybe before you even talk about how you wrote the book, like, can you describe the book a little bit? Because it's like a story. It's not an instructional book or anything. You educate people in a form of a story.
Yeah, the book is a funny thing. So in my job at Marine Money, I do a few different things. We organize conferences, and we're very excited to have you with us in New York in a few weeks. And we have a consulting and advisory business where we put together financial transactions. And the book started, I started sort of writing that book after Lehman Brothers in 2009. And what happened was there were a lot of investors that raised money based on distress strategies. The thought was that there'd be a lot of distress after Lehman Brothers. And so a lot of capital got raised. And as it turned out, because of support from government, sort of fiscal and monetary support, there wasn't much distress. But there was a lot of capital sort of seeking to make distressed investments. And shipping at the time was pretty distressed. And so there was a lot of capital sort of searching for shipping deals. And so I was working with a number of investors, primarily in New York, but in other places too, who were interested in buying loans from German banks, because they had understood that German banks, had the largest exposure to the shipping industry, and that because of defaults and regulations and other reasons, they wanted to sell those loans. And so I started taking investors over to Hamburg, where I have a lot of clients and friends at the banks. And we just sort of kept having, it was like Groundhog Day. We'd have this meeting where the investor would expect to, buy loans that were deeply discounted. And they didn't like appreciate that shipping finance is a real relationship business. I mean, it's a multi-generational cyclical thing where, you know, people don't typically just transact in distress the way that these guys were used to. And so we'd have these meetings, and the investors just couldn't understand that the German banks were sticking behind these clients and supporting them and not sort of just liquidating their loans. So I did that a few times, but I wrote this. I started the story because I wanted to sort of share that experience. And so I wrote a story for Marine Money magazine, and I did it in a fictionalized way about the, you know, New York hedge fund guy who goes to Germany to buy the loan and is disappointed. And so the article was published, and then I got all this feedback from people that had read the article, asking like what this guy, Robert Fairchild, like, what's he going to do next? You know, because he kind of, you know, he caught the shipping bug like many of us do. And so that's sort of how it started. So you're right. I mean, one of the things that I think is a little bit unique about the book is that it's a story, but it really is the goal of it is to try to share some of the kind of corporate finance and investment things that I've learned over the years that I've been doing it. So it's ended up being a sort of a unusual format, I think.
Yeah. Well, I mean, it's interesting because as you said, you're taking these hedge fund managers to Germany, and they think they're going to buy these distressed loans, and yet those banks are sticking by the clients because they understand the industry. They understand that volatility is part of the industry, and they're not going to just unload the loan portfolio just because they are in a down cycle.
Right. And I think it's that, and it's the kind of relationship nature of the business is the other factor. But I think that's a lesson that equity investors, you know, need to be mindful of as well. You know, this is an industry where it is a cyclical industry, and it is a volatile industry. But there's a lot of reversion because, you know, 90% of world trade is carried on ships. So there's no obsolescence risk to the industry itself. So really, yeah, the down cycles become really great opportunities. I mean, a lot of owners complain that we don't see down cycles as deep anymore because there's too much capital, you know, that we don't see these banks arresting ships and auctions, and you know that was the sort of way, that was the playbook for many years for ship owners, so we're to really buy in the depths, you know, when you could get a 10-year-old ship for scrap value type of thing.
So after you wrote the book, following the article, what kind of response was there for the book?
The book has just taken on a life of its own. I had no idea that this would happen. I mean, I think it got picked up by a few things happened. One is that it was on Bloomberg's summer reading list one summer, and a few training programs. I think maybe, I'm not sure, a few of the big investment banks had it on their sort of reading list. And then a couple guys, Guy Spear wrote a very kind review of the book. There was a review on Seeking Alpha, which was really spread the word, because the book was just published by, you know, we have a publishing company. So it was never marketed or, you know, kind of didn't go through any traditional channels. I got Monish Prabha was very kind and sort of supporting the book. Wilbur Ross, I mean, a few people that had some you know, very respectable people liked the book and supported the book, and that helped. But yeah, it's gone on to become you know, it sells a lot of copies. I guess you know, it's not Pulitzer Prize winning material, but I think it has sort of filled a little bit of a gap for people who want to get educated or interested in learning about the industry, both financially, but also just, it's a wonderful industry. I mean, it's populated by amazing people. from the crew, the owner, everyone involved. It's a kind of a magical, special business.
Well, your book serves a purpose of educating people about this. It's a complicated business. It's a complicated sector to understand, and your book serves a purpose of educating them in a funny way.
It's great to hear you say that. I mean, it was when I wrote the book, it was the book that I wish that was there when I got in the industry. You know, it was like what I wanted to read, because I remember when I got in the business, I had a sense of the sort of personality and character of the business. You would see it in newspaper articles, or, you know, kind of, you get a sense of it, you know, but I never found anything to kind of read that put that together for me. You know what I mean? There are economics books. There's fantastic books on maritime economics and finance and stuff, but it didn't exactly capture the sort of the spirit and character of owners. And you know, one of the things, and I've written 3 of them now, and one of the things that it keeps me kind of going on these is I have really enjoyed trying to put myself in the position of the various stakeholders. Like, that's been a great exercise for me as a deal arranger as well, to think about, like, okay, if I'm the equity, how am I thinking about this? If I'm the debt, how am I thinking? If I'm the charterer, you know, that's been like really constructive for me.
Yeah, you know, I have 3 quotes that I like from the book, and I'd like to read each of them to you, and maybe you can kind of walk us through what's the thinking behind it. So let me start with the first one. Everyone knows everything these days. Everyone knows what a ship was worth, and everyone thinks they know what a ship will be worth in the future. It is a market comprised of experts, but the experts are not always right. In fact, the experts are often wrong. The experts are often wrong because they know too much about a market that is inherently unknowable.
I mean, you will hear the most experienced people in the world tell you that it's, particularly if you look at dry bulk, you know, it's just too complicated. There are too many variables to actually figure out. I think most successful owners have a strategy of investing in down markets and, you know, trying to sort of average their fleet in terms of cost basis, to try to not have too much leverage. I mean, no matter how big the transaction, every owner is thinking about kind of break-even dollars per day. You know, it distills down to, and it's really literally to the hundreds of dollars per day. I mean, that's what, you know, you can see $1 billion transaction, and the analysis is coming down to very, very fine numbers. But yeah, no, we've seen some of the most experienced owners in the world get it completely wrong. And we've seen absolute neophytes wander into the market and get incredibly lucky. Unlike, you know, the broader equity markets, where you have a sort of, over time, you have like a lower left to upper right trajectory, right? This business isn't like that. This business goes up and down, and it's not a business where you put something under your mattress and then 10 years later it's 5x or 10x or whatever. I mean, the ship might be gone. I mean, right? They're wasting assets. So it's very complicated. That's what that quote is about.
Yeah. Okay. Let me do a second one. Things are always changing in shipping, like the tide. And even if they do not change, that is a change for people who were expecting a change.
Yeah. I mean, that goes down, that's the volatility, right? I mean, that's what's so special about the business, I think. And I've, you know, in talking to, you know, one of the big questions about this business is like, how should it be capitalized? You know, like, what's the right form of capitalization? Historically, it was owner's equity. It was just cash. And then it went to a little bit of leverage, maybe 50% leverage or less from a relationship bank. And that was sort of the middle part of the 20th century. And then as the capital markets got more involved, starting in the 90s, really, then all of a sudden this whole idea of, you know, weighted average cost of capital and all these different structures, preferred and bonds and mezz and all this stuff came into play. Most of which raises the daily break-even cost, right? So most of this capital is more expensive than owner's equity, because traditional owners don't ascribe a return to their equity. I mean, they're just parking capital in a ship, knowing that someday they'll make money on it. They don't put a cost of capital on it. And then the bank debt is super cheap, as it should be. Conservatively structured bank debt is very inexpensive. So the volatility, a lot of people are counting on the volatility, and so that's
okay. And then that one is really good. I don't really know exactly. I never count the money when I'm losing the money. It makes me really sad. I only count money when I'm making the new money.
Yeah, that's that's the archetypal Coco Jacobson, who is a synthesis of a certain type of ship owner. But that's, I mean, I think that describes a certain philosophy in the business. I mean, I think owners, this has been a private family owned business. It still largely is. We have about 100,000 ships in the world fleet, over 10,000 tons. The average owner has 5 ships. Ships are used as storage places for wealth offshore. They're dollar denominated. They're people use ships for different reasons. So I don't think that the actual cost accounting of ships has always been. It's not quite as rigorous, I think, in all cases. So so that was an owner who, he just liked to think about the good times.
And so after you wrote The Shipping Man, you said you wrote a couple other ones. Did they come after? And what are the other ones, the titles?
Yeah,
and what they're
the
about?
second one was called Viking Raid, and that was really focused on the LNG tanker market, particularly the sort of dynamics between the US and China. It's all the same cast of characters. All the books are the same characters. And then the third book, and again, that's another book that involves master limited partnerships and a weird mix of the sort of corporate finance and hopefully a little bit of fun. And then the most recent book was called Exit Strategy, and that's a book that's about Coco Jacobson, who's that main Norwegian ship owner, trying to figure out when to sort of get out of the business, how to exit. And that's a thing. Those are all, all the themes that I cover in the book. They try to capture the sort of mood in the market at the time. So there are a lot of owners. I think now there's a generation of owners who are kind of thinking about that. We're thinking about the exit strategy from shipping. A lot never exit, actually. But it in this case, an exit strategy, the question is with respect to decarbonization, basically. Here's an owner who's as at a point where he has to decide whether he's going to reinvest in this whole new environment, which is really different. This is a guy who started in the 60s and trading into war zones and doing all kinds of stuff. And now he's found himself in a world that is completely transparent, in terms of everything. But now decarbonization is going to require a different mode of thinking and different kinds of vessels. And I mean, it's unknown really what it will require, but I think everyone senses that it's going to be a big change. So that's what that book is about.
With all this knowledge of the industry, your involvement in the industry, what are you doing right now in terms of, are you invested in the industry? How are you seeing the industry in the future, or are you just involved on the finance side?
Yeah, no, I mean, I think it's a funny time in the industry. I mean, it's a great time. I mean, we've seen you follow the markets. The container ships and the bulk carriers super strong. I think the tanker market is set up for very, very good times based on the fact there's a very small order book and the fleet is relatively small and we have a lot of demand returning. It happened first in container ships and then it happened in dry bulk. And I think people expect that the tanker market will have, the consensus view is that the tanker market will be a beneficiary of that. So we have very strong markets, but at the same time, we have this regulatory environment that's unlike anything the industry's ever seen in terms of decarbonization, carbon tax, customer requirements in terms of environmental issues, and I think the industry is very mobilized and motivated. But we're entering, like, I would say, a new period for the business. So it's kind of, it's a super interesting time. I'm very bullish. You sort of have to be bullish in shipping. The people that don't believe in it, it's just too painful. But ships play a vital role in the world, and they play an irreplaceable role in the world. And they're actually very efficient. They can be made more efficient, but in terms of the amount of cargo they carry and the sort of per unit impact of what they do, they're like amazing. I mean, they're carrying food and energy, and they allow comparative advantage to occur. And it's like, I'm bullish on ships, so I'm bullish on shipping. I don't think I don't think there's any alternative. But I will add one thing, which is that I've never seen the industry so mobilized and working together toward this goal. It was kind of like all the vaccine makers, who were like arch competitors. There's a moment where people say, wait, we have like a problem to solve. And if we all work together, we'll sort out the economics in due course. But like right now we have a problem to solve. And the industry has that atmosphere and mood now, which is very, I would say it's pretty amazing. And it's a very competitive business. So it isn't always like that.
In the final comments, you have I believe it's a virtual conference coming up this month, and you invited me to be one of the panel members or speakers, and I appreciate that. But can you tell my audience about it, what it is, when it is, so that they could be on the lookout for it?
Yeah, that's great, and really happy that you're able to join us. This will be our 33rd annual Marine Money Week. It's usually at the Pierre Hotel in New York. It's the biggest sort of gathering of ship finance people in the world. And our industry, which is not well known in America, for like 4 days, shipping people take over Manhattan. It's like every rooftop restaurant, everywhere you go, there's like Norwegians and people from Singapore and all over kind of converging. It's a special time. This year, this will be our second year. We're going to do it virtually, which has also been great. Definitely not as much sort of fun out on the town, but it's we've been able to attract a larger audience. The event is free to attend, so there's no travel costs. There's no cost. So it is actually just a wonderful opportunity to share the industry with more people. So for investors who are interested in this sector, I mean, it's I think we have 60 companies presenting, and it's not just sort of pitching. I mean, this has a sort of industry approach, so that it's really interactive discussions. We assume anyone can go to a website, and there's a lot of equity research produced. You can see who these companies are and what they do. What we try to highlight is like the people and the personalities and the management styles, and kind of get into that. So that's June 21st, June 22nd, and June 23rd. And we're delighted to have you. As I said earlier, we're very interested in sort of how to how the industry is sort of best capitalized and who are the right kinds of investors and who is it appealing to. We're trying to sort of, our sort of mission in life is to facilitate capital formation for shipping. So the more of your viewers and clients and network that can attend, the better, really.
Okay, perfect. Is there anything else that you would like to add before we finish?
No, I want to thank you very much for your support of the book and also just your interest in the industry. I think it's great to have people like you that are not only taking an interest, but just in having spoken with you and seeing some of the things you do. I mean, you're taking the time to read and think and kind of invest a little bit of yourself in it, which is I hope you've got the shipping bug.
Well, I definitely do, and it's interesting because I've had my YouTube channel for some time, but I used it for years just to kind of, from time to time, I would interview a CEO of a company, and then I would post it there just because I didn't want to take up the space on my server. So I used YouTube for that. But then when this whole COVID happened and the rates going up to 200, 300,000 per day and the floating storage, and I started talking about shipping, all of a sudden my channel exploded. So I kind of owe a little bit of my online success to the shipping because I started talking about it during the time when everybody was interested in it.
That's great. Well, maybe you filled a little gap like the shipping man has. But I do think there's like pretty much always something to do in shipping. It is a good, I think, space for investors to look at and have on the radar and think about. And it's also, the other thing that is really cool about it is it immediately engages you in the world. I mean, whether it's droughts or, political issues or congestion or weather or, whatever it is, like ultimately shipping is affected. And so when you become a student of shipping, at least for me, and I think a lot of people feel this way, you're just sort of plugged into like a lot of things in the sort of global macro world. And that's just a lot of fun, I think.
I agree with this. And when it comes to like the oil tankers, for example, it's hard to understand the oil tankers without understanding oil and without understanding energy and things like that. So you're absolutely right.
Yeah, which I think is one of the things that makes the business so fun. I mean, it's one of the things that most people who kind of find their way into shipping from other industries, like sort of, usually the reaction is they love it. They understand that it's hard economically, but they just have never experienced an industry so complicated, but yet so sort of stimulating and enjoyable and with such good, people in the market, like talking to each other. You can sort of call anyone. I hope that's been the experience that you've had. Every door is kind of open if you're interested. I
want to say something about it because you're absolutely right. Because when I first reached out to Robert Bugbee, the CEO of Scorpio Tankers, for an interview, I was just shocked that he just agreed right away. Because when I was trying to interview other people on my channel, and when my channel was small and growing, the first question was, well, what's your audience? How many subscribers do you have? In other words, everybody was just like, what can I get out of you? Yeah. And Robert just, gave me his time and was a fantastic interviewee. And yeah, you're absolutely right. The sector in general is very open to that kind of communications.
Yeah. I mean, he's a wonderful guy. I think, what it has to do with is that I think we're all like kind of proud of it. I think we're proud of the business and like really happy and excited to like share it with people who show interest. I think that's sort of it sort of transcends the economic, what can I get? It's sort of like, oh, let me tell you about this cool industry that I'm involved with. So I'm glad you had that experience. It's important that the industry welcome new people that way.
Yeah. Okay, Matthew. Well, thank you very much for your time. And for those of you who are listening to it, the name of the book is The Shipping Man, and I recommended it. And if you are interested in shipping, then it's a great way to learn about it in a very, very funny way. So once again, Matthew, thank you very much for your time.
Thanks, Marius. Take care.